In this video, we're going to be performing a deep dive on Air Products and Chemicals dividend safety. To begin, let's talk about APD's business model. Air Products and Chemicals is one of the world's largest producers and distributors of atmospheric and processed gases, serving other businesses in the industrial, technology, energy, and materials sectors. The company is headquartered in Allentown, Pennsylvania, and trades with a market capitalization of $37 billion. Air Products and Chemicals operates through three main business units: Industrial Gases America, Industrial Gases EMEA, and Industrial Gases Asia. Air Products and Chemicals is a well-known dividend stock because of its compelling track record of dividend growth. With 37 years of consecutive dividend increases, Air Products and Chemicals is a member of the Dividend Aristocrats Index, a group of elite dividend stocks with more than 25 years of consecutive dividend increases. Looking ahead, investors cannot rely on Air Products and Chemicals' dividend history alone to measure its dividend safety. For the remainder of this video, we will discuss the company's current dividend safety from four perspectives: its dividend safety in the context of its current earnings, its dividend safety in the context of its current free cash flow, its dividend safety in the context of its recession performance, and its dividend safety in the context of its current debt load. First, let's discuss Air Products and Chemicals' dividend safety in the context of the company's current earnings. When Air Products and Chemicals reported financial results for the first quarter of fiscal 2019 on January 25th, the company revealed that it generated adjusted earnings per share of $1.86 in the 3-month reporting period. For context, the company currently pays a quarterly dividend of $1.16 per share, which implies a payout ratio of 62% in the most recent quarter. Looking out over a longer time horizon, our conclusion is the same. Air Products and Chemicals expects to generate adjusted earnings per share between $8.05 and $8.30 in fiscal 2018. The company is on pace to distribute $4.64 of earnings per share during the same time period, which implies a full-year payout ratio of 57% using the midpoint of management's guidance band. Using earnings, Air Products and Chemicals' dividend appears very safe for the foreseeable future. Many analysts believe that comparing a company's dividend payments to its free cash flow is a better method for assessing dividend safety. With that in mind, we will now compare Air Products and Chemicals' current dividend payment to its free cash flow. In the first quarter of fiscal 2019, Air Products and Chemicals generated $655 million of cash flow from operating activities and spent $403 million on capital expenditures for free cash flow of $252 million. The company distributed $241.5 million of common share dividends during the same time period for a free cash flow dividend payout ratio of 96%. Looking out over a longer time horizon, the company's free cash flow dividend coverage looks slightly better. In fiscal 2018, Air Products and Chemicals generated $2.6 billion of cash flow from operating activities and spent $1.6 billion on capital expenditures for free cash flow of approximately $1 billion. The company distributed $898 million of common share dividends during the same time period for a free cash flow dividend pay ratio of about 90%. Using free cash flow, Air Products and Chemicals' dividend is still covered, though barely. We recommend that the company's existing or prospective investors monitor this trend closely moving forward. Companies do not cut their dividends in the good times. Instead, dividends are reduced when companies experience financial difficulties. With that in mind, this section will analyze Air Products and Chemicals' current dividend safety in the context of the company's historical recession performance. We believe that the best way to measure a company's recession resiliency is by assessing its earnings per share performance during the financial crisis that occurred between 2007 and 2009. Air Products and Chemicals' performance during this time period is shown here. Air Products and Chemicals' earnings per share performed reasonably well during the last recession, declining by 18% on a peak-to-trough basis. While the company is not the most recession-resistant company in the Dividend Aristocrats Index, we do not have any concerns about the company's ability to continue paying its dividend during future economic contractions. The last angle that we will use to assess Air Products and Chemicals' current dividend safety is by looking at the company's current debt level. More specifically, we will see how much the company's weighted average interest rate will need to increase before its free cash flow will no longer cover its dividend payment. At the end of Air Products and Chemicals' most recent reporting period, the company had $3.8 billion of debt outstanding. Air Products and Chemicals generated $37.3 million of interest expense during the same time period for a weighted average interest rate of 3.9%. The following image shows how changes to Air Products and Chemicals' weighted average interest rate would impact the company's dividend safety as measured by free cash flow. As the image shows, Air Products and Chemicals' weighted average interest rate would need to rise to about the 4.25% level before its dividend would no longer be covered by free cash flow. This is much lower than most other companies in our investment universe, and not much of a margin of safety at all. With that in mind, We believe that investors should closely monitor the company's debt levels moving forward. Thank you for watching today's video, which performed a deep dive on Air Products and Chemicals' current dividend safety. We invite you to subscribe to this channel and like this video, which will help more people discover Sure Dividend's investor education efforts. If you are interested in learning more about our systematic approach to dividend growth investing, visit our website at www.suredividend.com.